Kevin Nguyen. I am the Chief Operating Officer for Elite Mortgage, and we are having the first of the 6th training session for the Module 1, which is the basic, which is taking a loan application, analyzing the credit, and then also getting into closing. So for those that are going to be attending for the next 6 weeks on the webinar from 6:30 to 8:30, I want to give you an overview of what you guys are getting into, just the syllabus for you to expect here. So for the next 6 weeks, we're going to be covering Module 1. This number is a little off due to the new hire rotation, but they're every Tuesday from 6:30 to 8:30. And we're looking at how to take a loan application tonight, which will be just a basic consultation. We're not going to do the loan application where you ask the name. I'm going to teach you a little different way, a different method. Next week, we'll cover how to analyze the credit and income and asset once you get the documentation. Then third week, we will figure out, once we get the documentation, how do we pre-qualify them by pricing out the loan and also preparing the fee worksheet. The following week, week 4, we'll start doing disclosure for you to meet up with your client. And then week 5, we will work with processing to submit your loan, get the approval, and then we'll end it with week 6, where you get the conditional loan approval. Sorry, I'm a little warm here, so I want to take it off a little bit here. And then there's a Module 2. The Module 2 is actually taking it a little step further than just the initial consultation. Now what do you do after you close the deal? And that's with the follow-up and how you do remain in contact with your client. And then if once you're with your client, you want to polish up your skills, your presentation skill, get new business from referral partners, then we'll follow up with that on the Module 2. That'll conclude Module 2, and Module 3 would be taking your game to a whole new level by forming your own team, getting your hired assistant to help, because a lot of people will plateau due to certain numbers. Usually that number kind of falls between 5 and 10, and then they kind of get stuck there. They need that little assistant to get them to the 10, 15, 20 mark per month, and that's where you probably want to get your systems in place. The third module, which will take it another step further, would be our closing guarantee. Now when you do these guarantee, it's a little savvy. You have to understand a little bit more. It's a lot more advanced when it comes to the borrow pay compensation. How do we beat the lowest closing costs? How to stay on time to do the on-time closing guarantee. So that's what we'll be doing and working on for the next 10 weeks. Those are your 10-week syllabus. Now in between those 10 weeks, you don't have to wait to Tuesday to continue further the education. You will always provide lenders training. Lenders will come in and then teach you on underwriting guidelines, product guidelines, and it's all like conventional government, FHA, VA, USDA, along with niche product, jumbo loans, and so forth. So we're going to have one actually tomorrow at 10 o'clock. There's a webinar. If you guys aren't receiving our weekly announcement, make sure you send an email to TC, stand for Transaction Coordinator, tc@myequityzone.com, and when you send it there, they will send you add you to the list, and you'll be getting those notifications on a weekly basis. There is, and this is still ongoing, usually what we have is tentatively scheduled for the evening, morning, and afternoon. That is on Tuesday between 5 and 6, which is always before one of our trainings or our meetings related to mortgage. So for example, tonight's class is at 6:30 p.m. We would have the lender come in at 5 to 6. Then we'll have a 30-minute break before we leave, go into the 2 hours. And then Wednesday, we have it in the morning from 10 to 11, right before our in-house lead generation meeting. And if you need help generating leads, that's the meeting you want to attend. It's from 11 o'clock to 12:30. Those meetings will help you get new leads, and it's all about telesales. How do you make inbound count or generate leads to get inbound calls, and then what do you do when you're waiting for those calls? You make outbound calls. On Thursday, we have the mastermind meeting. It's like a town hall forum. You come in, we give you an update, you ask us a question. It's meant to further the mortgage division. And that is held right before that is at 2:30 to 3:30. And our mastermind meetings from 3:30 to 5 p.m. right before all of the owners meeting, the leadership meetings, and our new recruit presentation. So there are a lot of training if you guys need it. This video, if you're watching it right now, is on our back office. Those people you can attend live. And I always encourage people to either attend it live on the webinar in person, you guys can interact and I can answer your question, whereas the video you can't necessarily do that instantly. But I'm always available by email, and my email address and everything else you guys should have. We'll put it on the webinar for you guys here. So I want to let you guys know what you're getting into for the next 10 weeks. If you guys know a certain part of it already, that's fine, just skip it. And sometimes you can't wait 10 weeks or the first 6 weeks to complete this. And that's absolutely fine. All of the videos right now that for those on the webinar are available on the back office. We're just redoing it and updating it to kind of include it a little bit more, a little easier to follow. And if you do not have the back office, make sure that you do contact your upline. The upline, the person who introduced you to ERS. Have them give you a login, and that's where everything is. As of today, which is February 11th, the back office is somewhat updated, but by the end of next week, by the end of February, all of the documents and forms should be up there. All right. So far, there is a question. Let me just check the webinar. Okay, just audio check. Okay, great. So let me go ahead and lead into it. Today's syllabus, what we're going to go over is how to take a loan application and learn about how to, the characteristics, the 5 C's, the characteristic, credit capacity, cash, and collateral. We'll talk about what documentation, such as credit, income, and asset, and we'll show you some forms and other forms or questionnaires to help you do that, along with document processing, and then also the intro packet to send your client after you do the consultation. And then I'll give you a quick overview of how to use Calyx Point, just enough to create a file, not really do much more than that. I just clicked on something, I don't know what it did. All right. Okay. I know I clicked on something, did something. All right, tonight's next presentation is about how to take a consultation in 10 or 15 minutes. So what you're looking at is most people would usually say, you know, here's the loan application, take it or fill it out, you know, and then call me if you have any question. What I'm going to teach you guys is that we don't give them the typical 4-page loan application. What we're going to do is we're going to spend 10 to 15 minutes talk to them, request some documentation, and we'll build it for them. And I do have something for those people who like to give out a piece of paper. We did condense the 4-page into 1 page, so you guys can have a 1-page mini loan application. However, if you guys have, if you have a client that can't really see that well, it's very tiny print, so they probably need a magnifying glass. And they have a little eye vision problem. Okay, so I just want to warn you. So the first step is that we have the 5 C's letter. This one, I know that this is not meant to really for you to read. It's just for you to see the form, to recognize it. It's in one of your intro packet. So this 5 C's letter is where it is a Word document. You can type in your explanation. It's almost like a cover sheet. So you do a cover sheet, just fill out this form here, and then we'll go over the 5 C's, which is the characteristics. What is the purpose of this loan? Are they trying to buy a house, a first-time home buyer, maybe a move-up buyer? Are they maybe transferring title from a family member, like a gift of equity? Or are they refinancing to reduce their interest rate? What are they trying to do? So the characteristic of the loan is the loan purpose. So you want to make sure that you can answer that question. What I'm trying to tell you is that this here is what you need to keep in your mind when you're doing having a conversation with your borrower. A lot of people, you know, when you're talking about when they call to a call center, it'll just say, "What's your name?" This and all that. If you guys can just kind of skip that. Don't worry about their employment. Don't worry about the address. Don't worry about how long they live there. Don't worry about all that stuff at this point. Get to know them. Ask them also, you know, I hear that you're looking for a house, or you like the neighborhood. I mean, talk about all these things, make you feel comfortable. But in the back of your mind, you are trying to answer these 5 questions for yourself. So if you can answer these questions, make mental notes. I typically, what I like to do is get a notepad. If you ask on Windows 7, most people do. Windows 8 even works. If you click the start and you type in Notepad, Notepad, it's a generic text editing version, no fancy Microsoft Word or anything like that, and just start typing and use that. You can save. It's very minimal, doesn't take that much space. If you're a pen and paper, you can do that. What I strongly recommend if you do pen and paper is have a scanner. Most phones can act like a scanner now. Take a picture. Take a picture of it or scan it, and then upload it into Calyx Point. I'll show you how to do that. That way, whenever you need to refer to a client 2-3 years later, when they were just a prospect, maybe they weren't quite ready, credit challenge, maybe didn't have their job for 2 years, whatever it is, you can pull up the notes and that would help you, okay? So I would strongly encourage you find a method that works for you, taking notes. Mine is a notepad, and I usually pin it to my desktop and just have a little shortcut there. And then so when anybody calls, I click on it and start typing away. That's just the way I do it. I'm a typer. I type faster than I write. The second thing you want to keep in mind is the credit. Do they have any challenge? Do they have good credit? If they have good credit, they probably be a shopper. I'll let you know, if people have good credit, they know it. And they will shop you. And you got to be prepared to do that. But luckily, Elite Mortgage does have the lowest closing cost guarantee on the BRE. ERS Nationwide doesn't have that. We do have 2 companies. If you're a DBO, that means you're under ERS Nationwide. Elite Mortgage is under BRE. Our price point is very competitive. That's why we stand behind the lowest closing cost guarantee. So if they have any challenges, you need to identify, can they buy now? We also want to try and qualify somebody now. You understand that if they're getting credit repair or credit remediation, they can always increase it and they can always get a better rate. That's where you need to come in and look out for the best interest of your client. If they're only maybe 2 weeks away from maybe increasing the credit, then you might want to tell them wait for that 2 weeks because it's saving tens of thousands of dollars over the life of the loan, which is a quarter interest better. So you need to look out for the best interest of your client and not say, man, I got to close this deal for my own sake because I got bills to pay. We always look out as when you took your NMLS class, one of it is ethics, and you got to look out for the best interest of your client. So answer that question: Are there anything that has a concern with the credit? You're looking on the credit report. You're looking for any derogatories, obviously, any late payment, any bankruptcy, any foreclosure, any short sale, any deed in lieu foreclosure, anything that is going to kill the deal. You got to just know the basic about it. Obviously, at this point, when you talk to the client, you don't have you don't have the credit report in front of you, but you do have the question on top of your mind, and you need to know how to ask them because you want to kill it. My thing is that when you guys start getting a lot of leads in, the best use of time is to work on files that's going to close, and you want to put those deals aside. And I'm not saying being arrogant or anything, but when you get to that point, you need to focus your time on green activity, not the one that kind of suck up your time. So a one-time sucker would be somebody who keep calling you and say, hey, can I maybe apply right now, pull my credit and all that. My thing is that lean on professional credit repair guy, get to know a good credit repair company, and just send them that way. A good repair company would be somebody that would give you updates automatically, not by emails or anything. They have a back system when every time they do something, it sends it a U notification. Somebody that has an internal engine that will simulate a credit score. So it's like a what if we remove this here and we pay down this balance, it'll simulate and say your goal of getting the score up to 640 most likely is here. So look out for one of those good credit repair company. But those are when you're asking them and you already know a roadblock that, hey, we don't lend anything below 500. I mean, we do lend to put down as low as 500 guys, we're 10% down. But if they're at 400 credit score, and you definitely know that we can't help them, at that point.
Below 500?
Below 500. I mean, we do have VA, FHA. Technically, FHA doesn't have a credit score requirement, but the lenders have an overlay. We can lend down to 500, 10% down on FHA. So and I'm just giving you the extreme. If somebody comes in with a 400, you know there's nothing we can do at this point, unless they do private lending, they put 35% down, stuff like that. But if you know that the deal is dead based upon the credit, just say kindly, do get as much information during the initial consultation, and then just say, I know of a great repair guy. I think you need to start here. I call it, I need to get you mortgage ready. So I got you a little homework for you to do before we get you mortgage ready, and we'll send them over there. You rely or you pass on to a referral partner, a credit repair specialist, and then they usually will return a favor when they have anybody who's doing the loan. The next thing that you want to ask them is, how are they going to repay the loan? Do they have a job? If that job is seasoned for at least 2 years, if they've been working part-time, do they have overtime, do they have bonus? Are they self-employed? So the capacity is how are they going to repay that loan? What income are we going to use? And that income can come in the form of different documentation, and we'll go over that a little bit later. But do they have the ability to repay it? And defined by the qualified mortgage that came into effect January 10th of 2014, it needs to be 43% versus the income. So they can spend no more than 43% of their income. To keep the math simple, if somebody made $10,000, they can't spend more than $4,300 in their mortgage and also in other debt. So you're looking and you're asking that question. You're saying, and we want the gross. We don't want the net. You know, they usually take home this much. It doesn't matter what was your income on your tax return, on your W-2s. Okay, and then you can take that information. But while you're asking this question, a lot of people do make a lot of money, but they don't like pay taxes, so they write off everything, or they don't verify, or they don't file everything that they make. Unfortunately, we can't help those type of people, but if they have a large down payment, we can through private lending until they can build up the documentation, the verification paper trail. Okay, so private money is a good bridge. It's not for everybody, but it's more of an opportunity for somebody with the timing. If somebody needs, go ahead, Annie.
Yeah. Is that what a hard money loan is? Is that the same? Private lending and hard money, is that the same?
It's a euphemism. It's really called hard money. I call it private lending because it sounds better.
Okay.
So it's just, but the hard money is from a private lender,
Okay.
not institutionalized. It's not backed by any government agency. So I like to use private lending instead of
Sounds
hard
better.
money. And people, it just sounds really rough, right? Hard money. The income, just figure out what kind of income is it useful. The rule of thumb. Go ahead, Jacob.
You have a question.
Oh, I'm sorry. Let me see here. There is a question. Okay. So as I was saying, the capacity, just how are they going to repay it? Now when you're talking to them, you've already asked them what they're trying to accomplish, the loan purpose. You've already asked them the challenge, and I call it obstacle. So when and kind of going back to the credit, I usually say, do you know of any obstacle that we need to overcome? And usually you open that question, it will open one of those four items for you to discuss. And so the capacity, the general rule of thumb is that you want, whatever income you use, you want to make sure that it has been ongoing for 2 years, at least 2 years. And then it's I guess, understandably going to predictably continue for at least 3 more years. So 2 years in the past, 3 years going forward. An example would be that, if you're currently employed, unless the verification of employment, which they do, come back and state that you're getting laid off next week, then the probability that you're going to continue working there, as long as you're performing the job, is predictable for 3 years. A certain thing where, even though it's been ongoing for 2 years, like for example, child support. Somebody's receiving child support for their child, but the child's going to turn 18 in 2 years. Well, it's not going to continue for 3 years. We can't use that income. So that's something that's predictable that will not continue for 3 years, and we cannot. Okay, so we've got to be careful with child support, alimony, stuff like that. And for another type of income, overtime. So even if they work overtime a lot last year, it hasn't shown at least for 2 years, we can't use that. Same thing with commission and bonuses. So let's say they get a lot of bonus from their job, then those are the kind of questions. So when you're asking them these questions, make sure you ask them, do you have any bonus, overtime, commission, or any type of irregular pay besides your base salary? Right.
And if they've been getting that irregular income for 2 years, it's okay?
Yes, if you can, and you have to paper trail it.
Okay.
And sometimes it's missing a few months, then you would require underwriting exception. So for the cash, where are they getting the money to close? Purchase, the down payment plus the closing costs, and any prepaid items. Prepaid items, for those that aren't aware, prepaid items are usually your property tax, your homeowner insurance, your first month mortgage is really the interest on the loan, and any other type of upfront mortgage insurance premium. There are types of ongoing, recurring expense for owning a home, that needs to be paid upfront. Because people like to think that they skip a month mortgage payment, but in reality, they're just paying it at closing. They're just paying it in advance. For a refinance, they might be paying down the balance, or they don't want to roll in the closing costs. They want to come in out of pocket. We need to have a bank statement to show that, or some liquid asset. If they're planning to use the retirement account, we need to make sure that there's no repayment term. If there are, we got to include it with the debt to income ratio. So when a lot of these cash, where is it coming from? You need to ask them, is it from a liquid account? If it's not, is it coming? And if they do, there are people that want to do it, and they say, I'm going to get it from my credit card. That's fine, absolutely fine. Tell them to do that before we start the loan application, and then they already have it in the bank. That way we can hit them with the minimum monthly payment. But during the transaction, you can't do it. Okay, you can do it beforehand and so forth. So there's also what is called a DAP. DAP is down payment. That's one word. Down payment assistant program. So that's the DAP. Typically, what it does is give you 3% of your down payment. And if FHA will allow 3.5%, as low as 3.5% down, you can technically buy a house with 0.5% down payment. So we have lenders that do that, but there is a minimum contribution of at least $1,000, even though the 0.5% may be less. So they still got to come in with half, and that money can actually be gifted too. So if you have somebody like a parent or a family or relative, they can give you that money, and nothing can come from you. So you can buy a house with no money out of pocket. If you have loving friends and family that'll give you that money, right? So the cash, where is it coming from? And secondary financing can be, DAP is actually a secondary financing, but the DAP or a secondary financing can be a line of credit. Back in the mid-2000s, it was very popular to do an 80-10-10 or 80-20, which means 80% loan to value on the first, 20% on the second equity loan. And it doesn't have to be a line of credit, like a home equity loan, line of credit. So there's different types of secondary financing. Ask them where that is coming from. Where's your money coming from? For the collateral, it doesn't matter what type of property you buy. If you buy a single-family residence, which is the most common type of property, then you'll follow the guideline. If you buy a duplex, which is a 2-unit, or a multiplex, 3 or 4-unit, then your down payment requirement is going to be higher. Your credit score requirement is going to be higher. So your debt to income requirement might be lowered. So you can't exceed a certain threshold. So ask yourself, or ask them what type of property they're buying, because if you buy a 3 or 4 unit, you can't do 3.5% down. You have to put a larger down payment. So you do want to make sure you ask them what type of property they're going to purchase. Right? So do you guys have any questions regarding the 5 C's? And I see there is some question here. All right, any subprime loans available? Surprisingly, yes, there's a comeback from the subprime market. We actually have a lender coming in, introducing some of the subprime loan. Subprime is essentially right now conventional Fannie Mae, Freddie Mac. They're all prime loan requiring a certain credit score. Subprime is kind of that, not quite hard money. Hard money is where you can do stated income, stated asset, no credit pool. I mean, they're just banking that you put in 35%, you walk away, they still have 25% equity, have to market it down 10%. So that's what the hard money is. Alternative credit, or they call it Alt-A, which is also known as subprime. They will have a slightly higher rate, but not by much, usually about 1 to 1.5%, and they'll have a lot looser guidelines, and it's making a comeback. Right now, people are coming or introducing that. Once we have more details on how that's structured, we'll definitely let everybody know. The other type of comeback that's coming back is, what is it here? There's the subprime, the home equity line of credit. So equity loan, they're starting to come back too. People are starting to have equity loan, and banks are loosening up. And yeah, you can actually get equity loan. Right now, there's very few, but they do exist. They cap out at 85%. Back then, you can get up to 125% of the equity in your house, right? So I wouldn't be surprised in the next couple of years that we're back to 95, 100%. I don't think they're going to test it for a while for the 100 something, but they might. You might get some people once they kind of go up. But that's what you want to ask them, is what type of property, and do ask them, is it move-in ready? If they're buying it, and I'll kind of go over what to do and what not to do with it, just refinancing up there too. So any other question you guys have regarding the 5 C's? And again, what the purpose of the 5 C's is that you need to keep in mind, this is the 5 things that I'm trying to answer for myself, so I can structure the loan. You are the loan officer. You give advice based upon what information you obtain. But to obtain it, you got to ask the right question. So make sure that you answer this question for yourself. All right. So let me see. All right. So once you have your borrower's documentation, once you ask the question, actually I'm going to back up one step here. I'm going to take you here. This is a form. It's the new lead questionnaire for purchase, and then the one for refinance. I just want to show you that these are in your packet in the back office. You should post this up on your wall, and I'm going to bring it up on the screen so you guys can see a little bit better. What you can see, what it does is that even though we request them to get documentation from us, for us, there are certain information that we just can't obtain from the documentation you can send us. So while you're doing the consultation, if you need help, refer to this. These will give you the information. You should start with this. Get this form out, have one there in front of you, and you're going to ask them. Although your tax return will show that if they're single or married, their stats might have changed from last year. Remember, tax return is hindsight, so it's not the current situation. You do want to ask them, are they currently married or single? And if they have any dependents. Again, tax return will show you if they claim anybody dependents. But sometimes with family, they actually do let their relatives who might have a higher tax bracket claim their dependents. So you might not see it. So do ask them if they have any other dependents. If they're self-employed, some people, even though they pay themselves a W-2 salary, they own the company. Even though they receive physical W-2, they probably got a K-1 schedule, which is a self-employed borrower. Right? So do ask them, and ask them what the title is, how long they've been on the job, with the current income. These are meant for for you guys that are starting out, not comfortable kind of doing that. This was meant for those. In actuality, what I did this form was for an assistant to schedule a consultation for me. And what it is, if you work in a team format where you have an assistant, you can have the person, maybe you got a referral from somebody, have that assistant call the referral, the lead, and schedule a time for you to call them. When they call, instead to make the consultation a lot smoother, I'm going to ask you some preliminary question, and this is what my assistant asked me. So by the time I get on the phone call, it's quick. It's like 5 minutes because I've already had all these questions answered. Some of those would be, do you have any checking savings? Basically answering the asset question. Do you have any non-mortgage debt? Your credit score, what's your best contact number? Is this your first home purchase? This is to get geared towards purchase. When you do a refinance, it'll be a little bit slightly different. And how much the down payment. So these is where you can put your notes. And like I said, if you just scan it, when you're done with it, store it on Kaylee's Point. If you want to refer back to it again, then you can do that at any time. Okay, so let me go here. This is 2. And for on the refinance, it will look similar. So on the refinance, you'll see. Actually, the same thing, but on the bottom, it will ask, do you have, is there a second HELOC? It's kind of more geared towards a refinance. So use this form to help you. There's another form that I want to show you. So we have this form for you guys that looks like this, where you can cut it in half, and it will you can cut in this kind of little intake form while you're doing your consultation. So you can fill it out, and it'll tell you, where your notes. So all this is during the consultation. All right. I'm going to bring you back to what I wanted to point out is that some items cannot be obtained through the credit, income, and asset documentation, and that's where you want to do the questionnaires to do that. And you'll be able to soon, after you have a few loans under your belt, you figure that through the credit, income, and asset, we call it CIA, you won't get that information. But it's okay. As you we teach you how to build the loan application, you send it to them, you highlight the missing information, they'll fill it out and send it back. Okay. So what is the acronym CIA? We call that the credit, income, and asset. So you want to make sure you obtain that from the borrower. Ask what you're going to request. After you've got your consultation down and you've understood what their loan scenario is, the next step is to ask them, hey, send me your credit, income, and asset. Now the credit, to obtain the credit is not for them to go pull their own credit report. Just fill out an authorization form from us with our company letterhead, and then also fill out the credit card. It's important that you set up the expectation for the charge, the credit card charge. It's $12.65 for an individual, and then $19.20 for a married couple. That's our price. But I think recently Old Republic increased that fee. So those who are here at the corporate under BRE, then your fees gone up a little bit. Clear Choice, which is for everybody else, hasn't increased it yet, but they will. Not because TransUnion, Equifax, and Experian, every year they increase it slightly. Even though it's not much, they just pass it on to us. And every year it's roughly like 50 cents, a quarter. This year it's like 75 cents. So it's a little bit every year that they charge. When you're asking for the credit, let them know you're going to pull it once we get that, and you won't begin the process until you receive the credit, income, and asset. So the sooner they get it to you, the sooner you can get the pre-approval. There is another charge when they fill it out. Instead of that $12.65 and the $19.20. Once you pre-approve them or pre-qual them, you send the loan to the lenders. The lenders will then retrieve that same credit report. That cost usually range from $2 to $12. So on average, about $4 to $8. And if you add it all together, worst case scenario is about $25 for a single person, $35 for a married couple. Let them know that we're not going to charge that second fee, or the lender won't charge it until we submit the loan and get it underwritten. So they may never even see that second charge, but we do want to let them know. Because the number one thing is when you send it over without setting that expectation, they'll call you, or they won't fill it out, they won't send it in, they don't know what it's going to be charged. And kind of put it in perspective, $25 to $35 is not very much for them to put the skin in the game. Wells Fargo, Bank of America, some of the branches will collect $495 up front, which will apply towards your appraisal report, but and it's not refundable. So they just want to make sure, that's a big commitment, right? 25, 35 in comparison isn't that big, all right? So you can just let them know that, and they will. They can just go down Wells Fargo, they will say we need a deposit of $495, and it's not refundable. Right? But most of the time they refund it, to tell you the truth, if there's anything that goes wrong. Of course, if they don't qualify, they refund it. But they hold it for people who are shopping, and they decide to cancel, go somewhere else with no legitimate reason. That's when they would keep it for it. So income, when you're talking to them, some of the income documentation can be pay stub, W-2, 1099, tax returns, your award letter for Social Security, disability, any annuity statement or pension, along with if they did or they're a note holder, they receive monthly payment on a note. And again, if that one is going to continue for 3 years, and it has, and this one doesn't have to have that 2-year seasoning requirement, but as long as there's at least 3 more years on that note that they're receiving, they are the lien holder, then we can use the income from those notes also. I want to be clear on this. You do not need all of them in order to pre-approve them. You just need one of them. And what I mean by that is that don't wait until you get all the pay stub. Don't wait until you get all the tax return. Don't wait until you get, the W-2s for every year. Don't do that. If you can verify it in one, pre-approved and pre-qualified based on that, then condition for the rest later, just like the underwriter would. For the sake of time, if you're doing a purchase especially, you want to get them in and then make sure you maintain that, because they only got a certain amount of days in order to close escrow. So don't hold it for completeness. At this point, I know you might hear the contrary from processor, but for the sake of legality and possible lawsuit, you want to get them in and out, or at least get them pre-approved. Okay, get them pre-qual and pre-approved. All right. So, and if you just put on your note when you're sending to central processing, hey, I know I'm missing these things, but I need it for the sake of time. Then the processor will note it to the underwriter, and they will condition for it. They're aware of it. Now, some lenders will not accept it at all if you don't have certain documentation in the file. So you have to be mindful of that too. Even though you want to push it through, they just won't take it at all. Asset, we'll talk about bank statements such as checking, savings, retirement account, 401k, IRA, Roth IRA, all those stocks and bonds. The stocks and bonds, if they do want to use that, they have to liquidate that. Retirement account, if we use it for reserve, we only take 70%. Right now, I think they're doing as low as 65%, just due to the increase in taxes. Before 70%, now they do 65%. Some will even do only 60%. The reason why is if you're not at retirement age, they will penalize you for 10% plus whatever you need for ordinary income taxes. So that's why some will take 40%, only 60% of the balance. Okay. For stocks and bonds, they would show proof of that. Life insurance, unless it have cash value, don't put in. There's two columns that I'll show you in Kaylee's point. There's one is the death benefit. What amount would the beneficiary receive should you die? And some do not have any value whatsoever. But some do have a face dollar amount where you can cash it in and liquidate it because it built value over time. So there is a different column for those. Make sure that you do ask them for these. That's your starting point. In order to do that, when you're done, let me see if I got it in here. Yeah, so right here, what you want to do is there's a little sheet in the back office. It's a text document. It's very hard to read for those there. I'll pull up a closer document here. So on here, you can copy and paste this. So you just copy and paste this into an email, and just say, hey, to begin your loan approval process, we need the following documentation. This is your very generic W-2 borrower. We need the 2-year tax return, their 3-month bank statement, any deposit, and make sure they do understand that. And you set this up right up front, because if you don't, they're going to get annoyed why you keep asking them paper trail all these weird deposits. Like, man, I get this from my Aunt Sally on my birthday every day, and every year. Why do I need to document that? It's fine. If you can't document, you just have to understand you have to deduct that from your balance. Okay, so if they need every penny to qualify or every penny to come up down payment, that might be an issue. Right? Even that $100, or whatever that thing. So we just state that any deposit other than the regular payroll will we need to explain document, even if it's for just 1 penny. Okay, so we just say absolute lowest denomination, because 0 would be a deposit, right? So the penny. And the theory is this: if I deposit a penny 1,000,000 times, right, I would have, what is that, 100 million, right? Or not, 100,000, I'm sorry, right? I think I did it right. It'll be 10,000. 10,000, I'm sorry. It'll be $10,000. So the thing is that even though they're small, multiple can add up to a large amount. So it doesn't matter what the amount is. It's just if there's anything other than payroll that's considered. So make sure that you do get 3 months. In actuality, we only need 1 month bank statement. The reason why we ask for 3 is for approval's sake. We can pick 1 to 3, even though it's 3 months ago, just to get the loan approved, because the underwriter will always condition for the most recent statement at closing. So at that time, you can show the most recent one anyways. But if there's some questionable deposit on those 2 other statements, avoid that, use the older one. and then just wait for the new loan to come. Because it's going to take about, at least one bank cycle to go through it anyways. So that's why we ask for 3. And if they insist they only want to give 1, that's fine. We're just trying to help them get the smoothest loan approval possible. Same thing with retirement statement. They're usually about quarter, 3-month statement, in quarterly, or sometimes they only do annually too. So you just need enough that will cover 3 months. Driver license, social security card, and then of course the attached bar authorization credit form. All these forms will be in your back office, and then just download from there. Now, if they are wage earner, make sure you add these items, pay stub to W-2. So the top one is kind of just a generic. Everybody needs to provide this documentation. Then you have the self-employed. Instead of 2-year tax return, we need additional 3-year, and some only needs 2. Again, we kind of pick and choose, and then until we figure out what we need to do. But some do require 3, depending on that. Of course, the current business license. If they're retired, they don't have any type of pay stub or W-2s or 1099. They'll just have the Social Security award letter or annuity award letter. So get those documentation. If they're a veteran, actually that's missing. The veteran would need those there, but in addition to that, we'll need the DD 442, I'm sorry, 214. I'm totally forgetting the number. DD 214. That is just the documentation that tells them when they were on to be discharged, how long they've been in service, and so forth. And then once we have that, we will order the certificate of eligibility. But if they do have it, ask them for it. So this list needs to be a little bit updated here. And if they're a homeowner, they also need to get the mortgage statement for all properties, home insurance, property tax bill. There's another page in here that for the rental agreement. Okay, so that can easily be fixed to one. We'll fix that there. So this is your credit income asset. When you're doing a consultation, know that this is your end game. This is what you're really trying to do. You're trying to get them to commit to send these documentation over to you. Once you do that, then you can start your pre-qual and loan approval. So again, those 5 C's, keep that in your mind. If you can answer those, your end goal after you assess the situation and you already know what obstacle that you need to overcome, you need to send them this email or this list, hand it to them or whatever, and get them, put the ball in their court. Tell them, I can't do anything until you send these documentation to me. Okay, so, and then of course, it sounds like, I can definitely help you. It sounds like you're pre-qualified, but I can't issue a pre-approval until I actually verify all the information that you've given to me. Okay, so that's how you would normally just talk to them. You can figure it out. I'm pretty sure you can come up with whatever works and fits your personality, and just answer it the way that you guys would. All right, so let me see. Let's go back to. Let me go to here. So that's the needs list. I call it needs list. Once you get the documentation in from them, you do want to cross-reference it. So take your original email, what you asked them, have it there as your checklist, and as you're going through the documentation, check it off. And then if they're missing page 2 or 4 of the bank statement, note that. But I always like to put the word received, on this date, and then just put still missing. So at least they know that they're not asking for it twice, you're just asking for it to be complete. Okay, so whatever you're asking there. So that's the needs list that you send over. Go here. And in the intro packet that's on the back office, you'll be able, when you send that email that I showed you that has this list here, you'll attach a PDF attachment. In that attachment, we'll have a 1-page mini loan app. I'll show you guys in a second here. Borrower's authorization and certification form, the credit card authorization form, and if they are a renter, we need to fill out the landlord information too. And in that landlord information form, it will state, can we contact your landlord? Some people don't, to get 30-day notice to vacate it if the landlord knows that they're buying a house or whatever the situation. You got to be mindful of that. But there's also a little statement that said that we will need 12 months cancel check if you do not rent from a property management company or a private landlord. There's also a do not do list, which I'll cover in a second. And the impound disclosure, in the state of California, if you put down 10% or more, or have at least 10% equity, you are not required to have property taxes and home insurance included in your mortgage payment. You can pay it separately on your own, but if you put less than that in California, you're required. The only exception to that is government loan. They just make you do it regardless of how much you put down. Okay. Elite Mortgage, YSP stand for Yield Spread Premium. Yield Spread Premium is any credit, any lender's credit or rebate it used to be called. So a lender's credit is to help offset the closing costs for a borrower. So everybody can get the lowest rate if they're willing to pay. Most people aren't. Most people just say, I want the least out of my pocket. So they'll say, I'll accept this rate. So a lot of times when you see the advertised rate out there, it is the standard where it's a mixture of the borrower pays some, and there's a little bit of lender's credit. Somebody who wants to do the lowest rate, there's no lender's credit, so the closing cost is going to be higher. And then there's some people who want to buy down the rate for the lowest, and over time, there's what I call a break-even point, where the borrower would make up in monthly savings what they put up front, and then thereafter they would be ahead of the game and save over the life of the loan. So what the Elite Mortgage Yield Spread Premium disclosure discloses is that even though these loans do not have a prepayment penalty where you would be penalized by a certain dollar amount or percentage of your loan balance, or paying it down more than 20% per year, or just paying it off completely, there's no prepayment penalty in today's lending environment for a majority of the loans. But there is what, if let's say a borrower closed the loan, took the highest rate, received not only the enough to pay the closing cost, but actually get some money on top of that back. And they do this, and then within 3 months, they pay off the loan. Well, in that 3 months, the lender couldn't collect the money on the interest to make up for that loss of the lender's credit. So if the borrower took a lender's credit from the lender, any amount at all, even if it's to pay our compensation, and they pay it off, the lender will come after us. In turn, we make them sign this and say we will come after you to do this. So even though there is no such thing as a prepayment penalty, you have to keep it for at least 6 months if you do take any credit from the lender. Okay, so you need to know how to explain that. We never really have that situation. There are some savvy people out there that will do that. You know, they'll take the credit, they do that, they just keep flipping it. You can actually profit money off them. So there is a little bit of loophole in that. That's what we make them sign it. So I'm going to show you actually what that packet looked like. Okay, so you can go over it with your client.
I have a question too.
Sure. Okay. There is a question. Let me go ahead and answer some of these here. Somebody saying that Citadel Servicing has a full doc subprime loan. Great. Maybe I'll look into that. Thank you for sharing, Gilbert. Is 620 the lowest score lenders look for? Not necessarily. We do have lenders for conventional that go down to 600. For FHA, like I said, we do have for maximum financing, we can go down to 580. There was a lender that went down to 560 for maximum financing, meaning 96.5%. And then we do have lender that would go down as low as 500 on FHA, but 10% down. So the answer to your question, Jack, is that no, 620 is not the lowest score lenders will look for. It's 600 for conventional and 500 for FHA. Okay, and again, VA has no credit limitation, but that's only reserved for veterans. All right, so let me pull up the list here. So the intro packet looks like this. This is the one page. So the one page, you'll be able to edit, put your name up here, and then you put your website, put their information there. You want to put a picture, you can, you do all that. As you can tell, it's very, this one's not clear, but it's actually clear. This one was a scanned copy. But it is clear enough when you print it out, it's legible. It's just very small print. So it does have everything. It has the borrower's information, where they, how long they work, they live there, their employment information. They do have their income, they have their asset, and then they also have the declaration that is required for them. Okay. That's the one page. In case you do it, I used to send it out, I don't anymore. It's just we built the loan application based upon the documentation they send back. And it's the best way to do it, that I've found out. It's less hassle for the borrower. This is the borrower certification authorization for you to work on the file, pull the credit, verify the asset, verify the income. A lot of institutions will require this to be signed before they release any information at all. Okay. So this is for, and one thing I do want to let you know is that when there's a borrower and a co-borrower, they need to be married to each other. Okay, not just married, but married to each other. So you have a married brother and a married sister. They're on the loan. You would need two separate authorizations. One for the borrower, one for the brother, and the brother would always be the borrower. The sister would always be on the borrower. Whoever is if they're not married, the spouse would be on the co-borrower. And it doesn't matter who's on the borrower, co-borrower. I think it's more culture, kind of, one more wants to be on the primary or not. But keep that in mind, you need two separate ones. And for auditing purposes, this better be dated on or before the date that you pull the credit report. Not after.
Before.
On or before. Okay, so don't get this after you already pull the credit report. Right? So here's the credit card authorization. And this is where you do, if they want you to, they want you to fill in the information, go ahead and do that. But if, I would usually use it blank, and we'll fill it in, just because sometimes they're at $2 to $12 that we tell you, it might be different, so we just leave it blank. But if they ask you, you can fill it in, not a big deal. Appraisal fee is usually about, right now, it's about $450 to $550. So on our credit report, we kind of put it, on the fee worksheet, we put on the higher end of $550, just to over disclose. That way you can tell them that's what the range is probably. Down here is the little section that if they initial it, we can use it for future charges. So you can use it for appraisal and so forth. But if they didn't fill it out, you can always call them verbally. What I usually like to do when you take a verbal authorization from somebody, I just say, give me a secret word, something that doesn't, just something. That way, when you're noting in your case form the conversation log, and you put the secret word, you kind of do a memory trigger. They said, oh yes, I did actually authorize to do that. That word means nothing to us, but it means something to the borrower. That way, it just gives you a little layer of, hey, memory trigger, you did authorize me to do that. Okay. It's always best to do it in email, though. If you just tell them, send me an email, say, I authorize you to do that, that's the best way to do it. But some people, they're not available by email. So here is the landlord information. I'll fill out the information. I'll ask, can we contact them or not. It does state that in less than 12 months, we need 2 years of employment, of residency. And on the bottom here, you must provide cancel check for the last 12 months if you do not want us to contact your landlord. And the landlord would be usually a property manager, but it's a private, whether they let us contact them or not. If it's a private owner, and it can't be found through a Yellow Pages, meaning like a business entity, we still need 12 months cancel check. For the loan approval process, and all this information up here that you guys are seeing, that one can be changed with your information. Okay? So and when you send this over, what it does is it mentally prepares them so they can know what the next step is. And it's very broad, guys. It's very vague. It really doesn't mean much, but I always, if I'm sitting in front of them, I say, here, this is what we're doing today. We're doing the application. And we're going to order documentation from you. Here's the list of the credit, income, and asset. And then we're also going to order other documentation from third parties, such as if it's a refinance, we'll order the preliminary title report. We're open escrow. We'll get the estimated fees. If we need to, if some lenders will require that we verify your tax return before we submit it, we'll do that. So there's other type of documentation that we'll wait. And as a loan officer, you should know if you're planning to go with that lender, and you're probably going to mess up the first time you go with that lender, and you'll probably waste about 2 to 3 days. A good example with some lenders are requiring that we verify the tax transcript before we even submit it, and most lenders would do it at closing. So you just got to know how the lender works. If you submit it to processing takes, let's just say worst case they're slammed, take 3 days to submit it. And by the time they submit it to the lender said, oh, we need to order 4506, you lose another 3 days, and you start the process over. So you can lose like about a week if you don't know. So what I recommend is when you're talking to the account executive, the lenders, they're your help desk. The account executive, these lenders, they're here as your customer service rep. If you have any question, of course, central processing here will always direct you in the right direction, kind of like a central, they know all the lenders. But once they direct you there, you need to verify the validity of your loan scenario with that account executive. There's just the little nitty-gritty stuff that will kill the deal, and only you would know, and there's no form that would ask you that. So if you run it by the account executive, it might save you some time and heartache. Okay. So after that, we will submit the loan, Mr. Borrower, and it'll take, right now about 1 or 3 days for the lenders to underwrite and approve your loan. Then once it's approved, we'll draw the loan docs, and right there it skips the whole appraisal and all the other stuff, but it gives them an overview of what to expect. So documents are drawn, you sign it, we'll fund the loan, and then records, and you're entitled for the new property. If you already own it, then a new mortgage will be recorded. And this is the do not do items. A lot of people use these here, but these were just based upon, I kept adding, I think I started out with 5, and then every year, or over the years, I just added more stuff as I encountered them. There's a few more missing I should add to it, but generally you want to let them know, do not change any job. And I kind of joke around with them and said, even if you hate your boss, just grind it out and just wait, and then say, F you later, okay? Wait till the loan closes. And then you want to, don't want to switch and move money around. Make sure that the money, if it's going to be moved from one account or the other, you need to be able to paper trail it. If you can't paper trail it, ask me. Tell me your situation. I will find the right way to do it. There is definitely a right way and a wrong way to do it with these moving money around. Okay. So if some of the money is that they're getting it from gift funds, if they're getting it from their relatives, there is a right and a wrong way to do that too. So continue to make your payment on time. Don't stop making your mortgage and rent. Just thinking that you're going to move in by next month and you don't need to skip a payment. Regardless of what date I promise you, Mr. Borrower, you still need to make the payment on your due date. So I will try my best to close by the end of the month. But if I don't, the first coming around, you got to pay your rent, you got to pay your mortgage, you got to pay all that stuff. And you can always get prorated and reimburse that amount later. But make sure that it doesn't kill the deal with any potential late payment. Don't make any major major purchases. When they're buying a house, people like going furniture shopping, appliance shopping, just, whatever you name, they want to buy a new car, maybe they do.
Put in their new driveway.
Yes, they do a lot of crazy stuff. So make sure you tell them do not make any major purchase. And I mean, if you do, you can spend cash. Don't charge in your credit card. You do that. Your payment, we might be at the threshold trying to qualify for your maximum purchase price. Now you just drop yourself 20 grand and you price yourself out the house that you love, just because of one payment of maybe $100 or $200. Okay. Don't co-sign for any new credit account. There are times when I had somebody co-sign for their niece or nephew for college, for a dorm. And that payment went in and then it killed the deal. So co-signing usually happens with that situation. I never really seen anybody where it affects you so much, but if you're doing a dorm, it's $500, $600, $1,000 a month, so it will kill the deal with those large payments. Or even a car, when they co-sign for a car. But most people know better. It's just when it comes to dorm, they don't think it reports, and it does. Do not transfer any gift funds without letting me know beforehand, meaning letting you know, the loan officer know beforehand. So you want to make sure that if they have gift funds, there's 3 documentation that the gift donor will have to give. And that first documentation is a signed letter stating that this is not a loan, it's a gift that does not require any repayment. They have to sign that. Now, if it was a true loan, most people who's giving that money probably wouldn't sign it. Okay, but if the family, they trust each other, that's fine, whatever they do. But we have documentation knowing that it is a gift. Second thing they need is the most recent statement showing that they have the ability to gift. So if you're going to give me $10,000, you better show me you have $10,000 in that bank account, not 0, a deposit of 10, and then your current balance is 10. That means that it's just a pass-through. Okay. So if that does happen, that's where we ask for 3, and then we just pick the next statement, and you do that, right? But you gotta make sure there's a fine line between fraud and not. Okay, so you gotta make sure, although the world works differently, don't be involved in any fraudulent activity too. And if they do travel, just let you know, meaning the loan officer, you guys, let you know so you can accommodate. We actually had a signing in Turkey where we would email the documentation to the U.S. consulate, and they would have to schedule an appointment with the U.S. consulate, and the appointment just kind of let you know, so if you guys ever run into this situation, it's not that you walk into it and then you get an appointment, okay?
Oh.
It's actually like a 2-week waiting period to do that. So you need to plan ahead, schedule the appointment with the U.S. consulate. There's a U.S. notary in there, or U.S. embassy, some are called consulate, some are called embassy, and then they can sign document there. And in today's world, you don't need to overnight. Before we had to overnight, but now they just email it, they print it, they scan it, it's back. Or they can avoid all that and do a power of attorney. And they can authorize somebody, and it has to be a specific power of attorney. This general power of attorney versus a specific one. It needs to tell you specifically this APN number, this address, and so forth for them to do that. So there are ways to accommodate their travel plans, but they just need to tell you ahead of time. This happened a lot in the fall, going into the holidays, the winter months. So make sure you ask them, are you planning to go anywhere? And this will help you tell them without you telling them. Once you send it over, they'll read it, they'll understand it. And if they say, why do you tell me? You pull it out, you sign this. You know, and then it's like, you should, I disclose it to you. None of these are formal disclosure. It's not required for any lender at all. This is a consultation type of packet that you're giving them to consult and advise them. Okay. Don't undergo any major. I'm sorry. Do not make any offer on any dilapidated property. Dilapidated just means a fixer-upper. If there is a property that it's not move-in ready, it's maybe missing a hole in the wall, there's missing flooring, piping is incomplete, electrical problem, whatever it is, we can lend on it, guys. It's just a different type of loan. And if there's any type of repair needed, an escrow holdback, this is one of the terms you guys should know. It's very limited to certain lenders, but we do have it. So an escrow holdback versus a renovation loan are two different things. And I'll give you kind of a quick overview. An escrow holdback is we close escrow and they give you 7 up to 30 days to fix the repair, and that's it, done, not a big deal. And they just hold our broker checks. So you as the loan officer will not get paid unless we satisfy it. So it encourages us to motivate the client to close, right? The renovation loan is that it typically takes 6 months or more to complete, and there's usually a draw to pay out to all the contractors. And usually there's an initial draw and then the final draw. But if you do a full-blown where there can be multiple draws. Okay, so that's the difference between an escrow holdback, where they just allow you a certain amount of time to hold your broker check, versus a renovation loan where there's multiple payout to the contractors. Okay. So we can do it. There's different type of loans for those. If it's a refinance and they really want to upgrade their flooring, because maybe the carpet's really ugly and it's old, and they want to put some hardwood floor, or if they really want that master suite, make it a master retreat, knock down that wall and connect the rooms, and whatever they're doing, tell them to hold off. Because if they knock a hole in the wall and the appraiser comes, they're going to have to repair it, right? And they might need that money to do the repair. And so then we're stuck. We're kind of, where they need the money, but we can't give them the money, but there's value in the house. So make sure they do not undergo any major renovation which will affect the appraisal of the report. 10 things to do and don't do during the loan process that will affect your credit. Make sure that if they think, even remote in their mind, man, is this going to affect my credit score? Don't do it. If it conjure up that thought, it's probably going to affect your credit score, and probably negatively enough where you won't be able to apply for the loan and the terms and conditions that you sign up for. Don't apply for any new credit card of any kind. That is typically when you go to Walmart, Target, Nordstrom, Macy's, whatever it is. They say sign up today, you get 10% off. Don't do that. I mean, you can get 10% off later and get a loan now, right? So don't apply for any type of new credit. It'll show up as an inquiry. You'll need to explain it. and then whatever balance you purchased that day will show up as a balance, and there's a minimum payment. It all affects your debt to income ratio,
Right.
especially when you're buying a house. Most people always want to buy at the maximum that they can afford. And just by having that little extra payment, it kicks them down, and it might put them out again. Don't pay off any collection or charge off. Okay, so the reason why is the credit system is based upon how old and how recent it is. I got let's say I have a collection for 10 years ago, and I decide to make it right. It's only $100, and I decide to make it right because I just feel guilty about it. I called them and said, I'm going to make a payment. So something that was dated, so 2004, with $100, and the credit scoring system said, this is way beyond 2 years ago, and my score is this. As soon as I pay it off, my status is still collection, right? It's still collection status, but now the date updates to February 2014. The system doesn't know any better. It said, you just got a collection in February of 2014. Your score dropped 60 to 100 points. Okay, so there is a right way to do it. If you want to make it right, it's fine. We can pay it at close of escrow. Okay? So whenever the underwriter condition to pay off collection, they don't mean pay it now. They mean pay it through escrow. Okay, or your score will get screwed. Because not only do they pull the credit in order to pre-qualify you, they also pull it right before funding. And that's usually between 1 and 3 days before funding. And they will check again. And if the score drop or anything happens, they have the right to deny the loan. Okay, so it's quality assurance. Okay, this is QA. The other thing is do not, and charge off, you guys don't know, is when a creditor attempt to collect for the sake of balancing their books, they wrote it off as a bad debt. So they charge it off their books, but that doesn't mean that's the end of it. They send it to a collection account. So it goes bad debt, charge off to collection. So it can be 3 different accounts for the same things, for the same debt. So you might see 3 different types on your credit report. So don't max out anything or overcharge your credit card. That's kind of obvious, but if you the numbers are typically this. The ideal amount is to keep, and it ranges from 8% to 12%, so I'm just going to say 10% or lower. You don't want to use more than 10% of the available credit limit. The next threshold is the consensus 30% or lower, and then the 50%. Okay, so 50, 30, 10. So kind of, keep it under 50. If you can do it under 30, even better. Under 10, ideal. So that's where you want to be. But if you're at 0 balance, there's no payment tracking, so it's not good either. They want to see your payment history in order to see how how reliable and how dependable you are. Right? Now, there's a give and a take with having a balance on your credit versus having 0 balance. If you're trying to build up your credit score, you do want to have a payment. If you're trying to qualify for your maximum amount, you don't want to have any balance. You want to have 0 minimum payment. So you got to ask, what are they trying to do? Are they trying to get the max purchase price? Or if the score is low, are they trying to increase the credit score? So you got to advise them kind of based upon what their goal is. Okay. Don't consolidate your debt into 1 or 2 credit cards. What that means is I have 2 $10,000 credit cards, and one of them owes $5,000. The other one owes another $5,000. So we're at 50% both, correct? So we're at 50% here, 50% there. If you transfer that over to the other one, you're at 100%. You're maxing out your credit card and it's 0 balance here. So that would essentially, but you still owe the same thing. I mean, you owe $10,000 out of $20,000. What's the big deal? This one offered me 0% interest. That's a smart thing to do, right? But it can affect you because now you maxed out one credit card and your score dropped because you're maxing out. What it sends the signal to the creditor is that, hey, I need money. I need it, and something's going on. Okay, so when you start maxing out a credit card, you're in a desperate situation. So make sure you don't transfer it, even though they do kind of give you that 0 balance for X amount of months when you transfer it over. Same idea with the closing out the credit card. If I transfer it over and I close out this card, even though my overall Before the 5,000, out of that's 20,000. If I took $10,000 worth of debt, divided by my $20,000 credit, I still only using 50% overall. As soon as I close out that account, now I'm using 100% of my credit limit, right? So then that's why you don't close out the credit card even if you don't use it. Just leave it so that ratio is within line. Don't pay late, that's a little obvious, so make sure that you don't even pay 1 day late. They actually track the date that you pay. So if it was due on the 1st and it's not late, meaning you won't incur a late charge until the 15th, you pay it on the 14th, even though you made it, you didn't get any charge, it affects your score because you went over the due date and just kind of missed it there. So they do track that too to affect your credit score. Of course, don't allow any accounts to run past due more day. Don't dispute anything on your credit report. And disputing puts it into a status where the underwriter will say you need to take it out of dispute. It will say a comment that said, in dispute, customer state this. Whenever there's an in dispute comment, the borrower would have to remove it before we can close the loan. Because whatever in dispute, we don't know the true situation. Because in dispute, they freeze all the account or the status reporting and all that. So they might have ran up the thing and then, we didn't get the true monthly payment on that. So don't lose contact with your mortgage and real estate professional, meaning that if you have any question or anything changes, make sure you call me, your mortgage professional. That means you. And if you want to make an offer on the property, before you make the offer, check in with me to make sure that everything's still valid. And they usually request for an updated pre-approval anyways, and real estate agent will usually call us. So this is the do and do not do list, or we just call it the do not do list. And but there is one thing that we do say is do continue to make all your payment on time. Right? So it's really a do not do, but there is one do, right? So make sure that they read this. Most people appreciate this. You can always add it. And then I think I'm going to add a few more. Probably add a couple more. I know a few that can be useful. This is the impound disclosure that I would talk about in the state of California. That if you put more than 10% down or more, you're not required to have your tax and insurance. Then the borrow WISP is where I told you if there's no prepayment penalty. But in here it said that if they pay off the loan within 180 days, we're going to go after them because the lender's going to come after us. You need to be able to explain it to them so that they understand it's not a prepayment penalty. If you don't tell them about this, most of the time they'll call you and just say it. Okay? They'll ask you what it means. This is a pre-qualification letter. It's a sample. It's just, you can issue this to anybody. It's essentially an estimate based upon the verbal information they gave you. You can give it to them. And it just basically tells them what they qualify for, the information they gave you for the income, how much debt to income ratio, loan to value, the rate you gave them, everything else. This you cannot give to them until you verify their income, asset, and credit. This is called the actual pre-approval letter. This one has weight and has legal liability because the seller is taking your word that you verified that they're eligible for this loan. And if they base their decision upon your information, they can sue us. Okay. Whereas this one, it says on the bottom, says the pre-qualification, we didn't verify anything. This pre-approval actually states that we are liable, and we did verify it. But there are some outs. We say that we need to make sure we get a satisfactory appraisal. You make sure there's nothing clouding the title, and all the liens, are paid off. There's no derogatory changes between the credit, income, and asset. There's that it complies with all the additional lenders' requirement. That it does. There's no change in the market condition because what if the rate went up 1%? We qualify them at this amount, and now we were pushing the DTI anyways to make sure that there's no significant increase in the interest rate. Okay, so this one will have your name. In order for you to be able to get your own pre-approval letter without asking central processing for it, is you'll need to complete there's 4 test cases for DO, desktop originator. Just take that on your own, which will prepare you so you can complete 3 desktop originator finding on your own. We just want you to know that you can run the automated underwriting engine successfully. And because it's just a computer system, whatever you put in there, it's going to approve. So if you put the income wrong and you put it higher than it should be, of course you get an approval, you know, but we want to know that you know how to calculate the income, the asset, and so forth. It's not required, but if you want to have your own template and access to that, you will have to demonstrate that you know how to do it. Okay. All right, so let me go back to the PowerPoint here. So I wanted to take you down to the introduction of Calyx Point, which is the basic, okay? And then we should be done on time here, if not a little bit sooner. So the Calyx Point, and forgive me, I always say Calyx Point, but it's pronounced Calyx Point. And we use the Point Central, which is all of your data for the protection of the company, a security breach. You store everything on a server. So you have access to it 24/7, and you just need to log into our server. Everything's securely stored there, and all document is in one central place, kind of like a Dropbox is kind of how I put it for most people. So you get this login when you log in here. And it will, for the first time, if you log in, it'll retrieve the templates, anything that we update. So the good news is that if there's any fee change or anything like that, you'll get the latest fees, but our corporate will update it. Our mortgage admin assistant will do that. There is a question. Do we use the company fax number, which ERS will forward to us? If you are using our transaction coordinating service for the mortgage side, they'll forward it to us, but even if you send it to us and just let the central processing know, we can do that for you. There is a fax number. Elite Realty Services, they have an actual fax. If you give them that fax number, it actually prints out. You got to be here. So if you do need access to a fax, there's actually a service I'll share with you right now. It's only $1 a month for unlimited incoming fax. So it's very reasonable for $1 a month to get unlimited. I can't remember the name right now, but I will let you know. Judah, I'll let you know about that $1 fax service. And for $3, you can send out fax from your email, where you put the 10-digit and then add something. So it's very affordable. I'm going to do a class for what is it? It's going to be titled something to the effect. I heard it from another loan officer. They went to a class. It's called Free-ish, and next to free. So for loan officers, kind of starting out, and they minimize all the costs. They're good stuff. A lot of stuff I use, you know. So it minimizes the cost until you build up your business and do that. So we'll do a class on that later. I'll announce it another time. And Judah, you can send me an email to kevin@myequityzone.com. I think you have my email address. Send it to me. I'll make sure that I'll look at my email for you, that $1 fax service. So this one I actually got to use the computer a little bit. So I'm gonna. So the first thing is when you sign up on the Calyx Point, you have 4 folders. These top 4 right here, you'll have the leads, the processing, closed and funded, cancel, withdraw. The only file that you can write to is called the leads folder. Everything else is read only, but you have access to all your files. And once you submit the file to processing, the central processing will grab your file and move it to processing. At that point, the only thing you can do is add notes. So you can put notes and communicate with the processor, or upload documentation for the file. Basically, that's the only 2 things you can do. If you need to change anything else, call processing, and they'll make those changes for you. Once the loan closes and funds, I'm sorry?
No, it's
okay. And then, so once the loan closes and funds, it'll be moved here. Whenever a repeat client comes back, that's where you want to look for your client, and then you can copy. There's a little copy button, and then it'll copy, and then when you copy something, let me just show you real quick. Oops. I didn't mean to open it, but close here. Whenever, let's say there's the file that was in the close, you just hit copy. There's a button that will say copy only 1003 data to start a new loan. And that'll erase all the conversation log, all the documents and everything else, just take the bars of information. So if you do need to copy it to start a new transaction, use that button. Just make sure you check that, okay? And then you can just select where you want to put it in the leads. So going back to these folders, if you were in the lead and that file never made it just to processing, if our just withdrawn and they said, I'm gonna go somewhere else, or they don't qualify, whatever it is, you would move it. You would take it out of your leads and move it to your cancel, withdrawn, or deny. Now, if it is in processing, lender did deny it, then the processing would move it there. Okay. So that's how the folders work. So I'm going to take you through starting a new one. When you click here, you'll put new. Make sure you click the third radial button, and it says a new file from master template. If you're under the Bureau of Real Estate, select the Bureau of Real Estate. If you're under the Department of Business Oversight, make sure you click select that. I'm going to put the PRE. Hit OK. And as soon as you hit it, the first thing you're going to notice that's different from those who use the standalone Calyx Point versus Point Central, you'll see these red fields that are required. We set those up, and if you don't know it, just enter something. Doesn't matter what you put, it's your own data, right? So I'll walk you through a simple one, and this is just an introduction to Calyx Point. It's not meant for you to go out and originate. I'm just going to get you where, hey, you know somebody, you want to put them in the system, kind of keep them as a prospect. So we'll do this here. All right. So let's see.
So if you've taken all that information verbally,
And or send it to them, and they send you back, then you can add it all, then you add it all in on the Calyx then?
Yes. So the question is, when you talk to them verbally and you get the documentation, you put it into Calyx Point. I like to do that. I don't like to crowd my database with just prospect. Whatever's in my Calyx are true files. I use a separate database for my client relationship management. This does have that feature if you want to use it, but the problem with Calyx Point is not automated. Where if you want to send out an email, it's a little cumbersome. You got to go through a few things and click on that. Whereas a lot of other new CRM, they will automatically, based upon date triggers, time triggers, whatever it is, it will send it out and mark it towards your database. There's a lot of them. The one that we're going to teach you is called Mortgage Planner CRM. It's MPC for short. Check it out. You guys can go there, and it's based upon the Salesforce CRM. So we prefer that. It's very robust. It's customizable, and they can do that. But you can. Calyx Point's been around for 20, 30 years. They're not around for nothing. They do things well. It's just other people have made it a lot more, or brought it to today's technology. This surprisingly looked the same since it first came out. It looks archaic, but they don't want to have, you kind of like the saying that you don't want to teach old dog new trick. That's kind of what it is. They stuck to that concept, and they stuck to it where they said, if we change it, we got to train everybody. Everybody's kind of used to it. Okay? So on here, we're going to put training file. And you would fill all that. I'm just going to put the bare necessity. If you don't have it, just put all ones. That's what I do. If you don't have address, just type in a letter. And I would put their address. And I like to do title case like this, but for the sake of speed time, I'm just going to put a cap. Okay? And then I never put in the city. I just put in the zip. Here at corporate 9528, and it'll fill in the city. And next thing I would do, I just hit this button, and it'll copy it from the top. If they're buying something, I just change that to the determinant. Always select the property type. If most of them are single-family resident, you just put detached. And if they're a manufactured home, make sure that you understand if it's single-wide or double-wide. Ask that question. Pricing is preferred on double-wide. You have single-wide, you're limited to or very limited borrowers. Planned unit development, or maybe anything with an HOA. So if you have HOA, you're probably part of a planned unit development. Cooperative happens a lot of times in San Francisco, Bay Area. Condominium attached when they have a joining wall. So I'm going to put detached. On this here, we just want to click on this button. So for the loan program, most of you would just go a 30-year fix. If there's a program that you don't see, just send an email to tc@myequityzone.com. And if I hit a 30-year fix, as of right now, The admin assistant hasn't updated this on a daily basis, but when you come in here and you click on 30-year fixed, it will get you in the vicinity of where today's rate is, okay? And that rate will be kind of what everybody else advertised. They would advertise 70% loan to value. So if your client don't have 30% equity or 30% down payment, don't quote them this. It's just to be competitive. If somebody calls and say, hey, what is your rate? And instead of kind of shuffling around all that stuff, just click that button, say it's right about 4.25% today. Right? Close cost scenario, there are for BRE and DBO, so you can see kind of these here, depending on where you are. So I'm just going to pick one here. Let's go with this here. And when you fill it in, it'll fill out the fees on the fee worksheet. All right? And on the originator, make sure you select your name from the drop-down list. If you mistype, it won't let you save because it doesn't match your name, because the system is designed to only show the file that belongs to you. The appraised value, even if you don't know it, just put whatever the value is. And if you want to calculate the loan to value, like the loan amount, you put it again in the sales price and put 20%, and it'll calculate for you. And that way, if it's a refi, you can delete the sales price. And it'll be the equity there, it'll calculate for you. Just a little trick if you want to need to figure out the loan to value. Okay. So I fill all this in here, now I can save it. All those red items are done.
Except for the sale price.
Yeah, if I forget, but sales price is not required, if I forget the value and I try to hit save, it's going to give me an error message. It'll say subject property cannot be blank. And the more items that in red and you leave blank, the more error message you're going to get. The other thing I want to show you is on this side here, there's a little tab for those who couldn't see it. If you exit, it'll say loan information. And if you hit that button, it'll no matter what page you're at, it'll show you kind of just a summary of the file. This is your generic documentation list. So as you're getting, you pull the credit report, you can say I ordered today, I received it that date, and when you receive it, it'll check off the items. So I've already got their income documentation, I got the asset. But you know what, I don't need, so if you don't need this letter of inquiry, you can just check this here. I double click on the item, I uncheck the required, and it goes away. Okay, so if you want to add stuff, you have to go to a different screen, and I'll show you that where. But this is a quick way for you to be able to work on your checklist of your needs list that you're working with your client, and you open it up. If you update the status here, you can see that, you know, when this kind of, it goes down here. These are default settings, like Calix point, that we can't change. But on the bottom where you see the word ERS newsletters is what we added. So these are just kind of like our additional things that we do here. And if you can use it if you want, just track the date. So if, let's say you sign up on our newsletter, you put it there, if, you can hit those. You can always put a comment here. So whatever status you put here, it will show up on the pipeline, on that front page, and I'll show you here. So if we did, I just call this a different date, because it will take the date of the most recent one. So if I put this newsletter, usually we're probably not going to do that. Let me give you a better example. Let's just say that it was approved today, and I hit save, and this one I'm just going to put. And because I have so many training files, and put a number. Hit save. When I go to this screen here, my training file, I hit search. You see the statuses, it'll show whatever I put it there. So you can sort it. If you're working with files, maybe it's a prospect, or you're working with files that are back from underwriting, you can sort it there. Okay, so let me do. The other thing I want to show you is there is the status here. It's the quick one, but you can also go up to track and then status, And this is where it not only have your loan status, but if you scroll down, you can add more stuff to the documentation for those customized condition if you want to. So you can add more stuff here. So if you know they have child support, you can put that and it'll show up on this list here, child support. If it's not on that list, you can add, double click here. Let me go down here. If I go here, I can add whatever I want. You can put in the category and so forth. So you can create your own custom checklist if you like. Sure.
You're good.
All right, so besides the needs list and the loan status, you can go to your document management. This little filing cabinet, if you hover over it, it'll say document management. Another way to go through it, if you can't remember the icon, go to e-loan file, and the same thing as document management. When you go here, this is where you add, you hit this add button, and you put add from computer, and you'll pick a loan document. I'll just click this here. When I hit add, the first thing it's going to do is convert whatever document I have into PDF. If it's already in PDF format, there's no conversion state here. You'll just see it go straight to the next screen. But if it's in Excel, in Word, in text, there's limited format JPEG or TIFF or any type like that. The first thing right now is doing is converting it. So if you have a choice, just already save it to PDF, then you'll bypass this conversions. Let's take it here. So on here, this is my documentation, and you can scroll down and you can kind of take a look at it, make sure there's all this stuff here. I received it from Joe Borrower. And we'll just assume that this was the pay stub. So I'll put income, the category, and then I'll type in here for pay stub. And it will import whatever the file name is. But this is where if you search for any documentation, it will look here. So if I know they work for the state of California, I'll probably do that. And this is January pay stub. And whatever it is, I put that because whenever I'm looking for it. But because it's already in the pay stub category, you can either type it or not. This is for you. It's just made for you for when you're searching a large, long list of documents. You will be thankful that you followed your own file name convention. If you're doing submission package, do that. If it's a first round from the underwriter come back, you click on that, but we'll do submission. When did you receive it? We received it today. This field is just a time, so right now it's 8:19. And I'm going to send it to, let's say I'm probably going to send it to processing, or if you know your processor name, you can just put the processor's name. And then when I hit add, this is actually uploading it to your Dropbox, so to speak. Okay. So now it's stored, and as you can tell, depending on your internet connection, it doesn't take that long. All right, so you can upload it. This here, when I click on preview, I will see it here. There are some documentation, depending on how you convert it, it will say it's secured when it's not. If there really is no password, the one disadvantage is that when you hit preview, you can't see it. But that doesn't mean you can't view it. Just double click on this, and you'll see it this way. It just takes another step instead of previewing it. Once you have this here and you highlight it, you can always email it to other people. You can print it out, or you can just save another copy back on your local hard drive. So it's easily accessible to you however you want it. This is the central storage for your files. Put whatever relevant to the file. If you have a new condition that the underwriter asked for, upload it here, and you send an email to the processor. Conditions been uploaded, and they would do what they need to do. If you do a new submission, same thing. You upload it here, and then just send an email to central processing, notify them it's done. Right. So here's the search thing, and I like to just hit this little conversation log. And what it does is pull up conversation log, and I just like to put uploaded, paste whatever I did, and I just hit OK. It doesn't have to be very detailed. You just put little things. This is your communication back and forth, tracking, and everything else, right? So hit close. I'm going to close this out. And the compensation log can be accessed right here too. Next to the percentage, if we hover over it, it'll say compensation log. Honestly, I don't even know how to get to it from one of these here. I always go to that, I just go to that little, I guess, let me see if I can get you there. It's just, it looks like a notepad. And I've always learned it that way, but I want to see if I can mark this there. So it's just to write a percentage page icon, and if you hover over it, it'll tell you certain things here. And this is the little notepad. Click on that. I can add this here. Spoke or completed. We call it IC for initial consultation. And I hit OK. So this is just your tracking log. Okay. Now, in case you want to view it, it might, if you have long text, it probably be wiser to. And you don't want to open it to look at it. What you can do is go up to print, go to your conversation log, which is on the form, hit print preview, and then to me it's just easier to read from here as a long text and to click on each one to track down those things. Okay. All right, that's the introductory to Calyx Point, just enough for you to get your data in, kind of track it, communicate with the borrower. Next week we'll talk about, once you get the documentation in, how do you go through it? What are the red flags? What are you looking for? How do you calculate income? How do you verify and paper trail large deposit? And also with your income, asset and credit report. We'll go over that in very detail. And I'll be here for another 7 minutes at 8:30. If you have any question, feel free to ask me. I'll be out here for a little bit. So go ahead and feel free to ask me any questions. Thank you, guys.
Thank you.